Yo, what's up, everybody? It's Thursday, October 26th. So, I went back and I checked on some emails that I sent out on July 24th. And if you're a subscriber, if you were subscribing to my thing back then, you know what I'm talking about because I just sent out a reminder earlier today. Back on July 24th, and also, by the way, folks, if you're not subscribers, you could go back and listen to my videos around that time. I said that the market rally at that time, this is late July, was becoming highly speculative. In other words, the risk was building up. And the reason why I laid out the reasons why, I spelled out the reasons why. We were seeing a slowdown in the fiscal flows. You know, we saw a lot more bullish sentiment that had built up. And I said at that time in an email, I said it's a good time to raise cash. And that was right around the top of the recent rally. I mean, I think the S&P got up to 4,600. So why am I telling you this? Not to pat myself on the back, although I think it deserves, some kudos, the fact that, I did see that happening based on the flows. But I'm saying it to you because right now we are in the same exact situation, only the opposite is true. In other words, the market has gone way below its value point. It is way oversold. And if you look at the fiscal flow situation, it is actually improving now. Just like back then, it was deteriorating and it was saying, look, liquidity is being sucked out of the economy. The market is woo-ha, flying up there. I said it was very speculative. I'm telling you guys right now that the opposite is happening right now. I'm telling you that investors are selling down the stock market way below where it should be, and it's going to turn around. I'm saying this with 100% confidence that it's going to turn around. The fiscal surplus that we had shortly after the tax drain on October 15th, that's gone. We're back in it. We're back in a deficit. It's a small deficit, but nevertheless, it's a deficit. And as you know, as I teach you guys, a deficit means that the non-government, that's us, our swimming pool is starting to get filled back up again. The tax drain, that drained out the swimming pool, but now the swimming pool is starting to get filled back up again. That's good news, okay? There's still something like 39 or 37 billion, I forget the exact number, something like that, that we have to recover if we want to get back to where we were just before the tax drain. But that's going to happen by next week. I mean, next week on Wednesday, the 1st of November, that's a big first of the month payments day. So you got all this external bullshit going on. You got the monetarist zombies who are freaking out about interest rates. Look, if interest rates were really a factor, the Fed started raising interest rates back in, March 2022. We had something like 11 rate hikes. It was the most aggressive rate hike campaign since the late 70s, the early 80s. And, if we didn't have in 2022 a massive contraction in the fiscal support, and I talked about this the whole entire time that it was going on. I said there was when the COVID stimulus had run out, the economy had to adjust to a 2 trillion reduction in fiscal support. I mean, a lot of people confuse the interest rate hikes with the real reason why the market went down. The market went down because the economy, we had 2 negative quarters of economic growth, not because of interest rates, because the economy had to adjust to the loss of 2 trillion in fiscal support. That's the reason. I mean, and we came back. We got all the way up to 4,600 on the S&P. So we pretty much made all of it back, with the exception of, not even like 5%. We made almost all of it back. But if we didn't have that collapse in fiscal support in 2022, I mean, the Fed could have done 50 interest rate hikes as far as I'm concerned with the economy. Look at the economy now after whatever it is, 11 or 12 interest rate hikes, 5% economic growth. So, I mean, that's what's going on. Okay? That's what's going on. So I'm telling you right now, we are in a situation which is exactly the same, just the inverse of where we were in late July. In late July, I was telling you guys, and I was definitely telling my subscribers, I have the emails to prove it. I said, market rally is very speculative, raise cash. If you had raised cash, think about it. If you raised cash at the end of July, I mean, you'd be sitting on a pile of cash to buy right now, as the market comes down. And I know what's going on right now. People are freaking out once again. I mean, it's like what's incredible. And yesterday I did the whole video on fear. And I don't like watching this. Like, I came back today and I saw that we closed down. It looked like we were going to try to rebound during the day, but then we closed really weak. And I see all the headlines like, NASDAQ crash, meltdown, all these hyperbolic words and terms that are being thrown around. And I know what's going on. I mean, people, again, are freaking out and they're panicking and they're seeing all this external stuff or the monetarist bullshit about interest rates going up or the war. The war's going to be dealt with. And I don't want to get into this geopolitics and stuff, but I mean, I think the outcome of this is that the world's going to be a lot better place once once this gets dealt with. And that's all I'm going to say about this. But the point I want to make is that it's the same behavior over and over and over again. Back in July, as a matter of fact, I pointed out kind of like the giddy, euphoric atmosphere at the time, and now everybody was saying, now we're going straight up. And I'm pointing out right now how it's the exact inverse of that. And people are freaking out. And it's just like, when I look at this and how it constantly repeats the same thing over and over and over again, people panic, they sell out. I mean, it is really a fascinating thing. It's a fascinating study in human behavior. And so there it is. Flat out, I'm telling you that the market right now, where it is right now, has shot way. It's like when I said in July it was highly speculative. It's highly speculative now on the downside. Like, people are just selling willy-nilly out of total sheer panic. And that's the only way to put it, because the underlying, basically the underlying has been improving since October 17th. What are we today? We're at the 26th. So when 9 days past this, they keep selling it down. So, it's like a rubber band. When you stretch it too far, it's going to snap back. Same thing here. It's going to snap back. Next week, we got the Fed meeting, actually on the same day. That's November 1st. That's the day of these big first of the month payments. So, yeah, you're going to get some reaction off of the Fed meeting. That's normal, because you got the zombie monetarists or the monetarist zombies, I should say, who are always going to react to every little thing coming out of the Fed. The Fed is irrelevant. It's relevant in certain ways, but not in the ways that these monetarist zombies think, okay? The Fed basically sets prices by virtue of its rate-setting function. It also can be involved in the redistribution or the recomposition of financial assets. It could put reserves in and take out securities. It could put securities in and take out reserves. But really, that's pretty much more in the hands of the Treasury. The Fed is a price setter, and like I said about prices, I mean, it's just a redistribution of income. I mean, it changes nothing in the aggregate. It just, it might make the economy look a little bit different segments. One guy loses, one guy makes it. Like I always say, the income doesn't fly out into outer space. I don't pay any attention. I do not pay any attention. And if I do pay attention, it's from a perspective of understanding. Like I know what's going on. When they raise rates, I know that is gonna equate to a fiscal transfer. I also know that it's a price increase. Somebody's gonna be paid more. Somebody's gonna have to pay more. It flips the equation around. Everybody gets so fucking bent out of shape with this stuff. It's because if you don't know, that's what happens to you. It's like I was talking a few days ago, I did a video, I was talking about, some primitive tribe living in the jungle somewhere. They don't know how to explain like lightning or natural phenomenon. It's because the gods are angry. They have to put some kind of a meaning or an explanation on it, so that's what they come up with. You gotta be, we're in the 21st century. I mean, there's things that we know, okay? I mean, if you choose to stay ignorant to those things, that's your choice, okay? If you run with the sheep, because everybody's panicking because the Fed is changing the price on something, that's on you, man. That's on you, So I don't really have any sympathy for people who lose money in that environment, and when they're crying and they're whining like, they raised my interest rate. And if it is affecting you negatively and you are kind of paralyzed in a sense that you don't know how to at least take advantage so that it offsets at least some of the financial pain that you might be feeling, that's on you too. I mean, that's your responsibility. I'm here trying to help you understand this stuff. If you understand, with the old saying, cliche, knowledge is power. It is. It truly is. But for a lot of people, it's just easier and more comfortable to cry about it and say how terrible things are because everybody else is saying that. So I might as well say that too, because we're all in the same boat. And I know that human beings, we're social creatures, and we all like to be in the same kind of situation. It makes us feel comfortable when we're surrounded, with people of the same, the same customs and the same beliefs. It makes us feel comfortable. It's hard to be alone. It's hard to step out. It's hard to be an independent thinker. It's hard to be a contrarian. But that's why those things work. It's like from the movie Scent of a Woman, which was a great movie, and you had that monologue, fantastic monologue by Al Pacino, when he's in the school, and he says, I always knew what the right course was, without exception, but I never took it. You want to know why? Because it was too damn hard. Great line, man. Great monologue and a great line. A lot of good lines in that monologue. So, again, it kind of like these talks I have with you guys, they all kind of come back around to the same focus, which is like mental toughness, resilience, doing the thing that's hard, embracing fear and rising above it. It sounds corny when I'm talking about it in the context of the stock market, but it's just reality. I mean, that's the way it works. I'm telling you right now, telling you right now, in spite of everything that's going on with the fucking interest rates and the war and everything else like that, the market is overdone on the downside. And if I'm wrong, if we, you know, if 3 weeks or a month goes by and you know, we're like significantly lower and the economy's going into a recession, then you could say, Mike, you see, you don't know what you're talking about and you're full of shit and everything else. I mean, that's totally, you know, it's totally your prerogative to do that if it happens. And you know, whatever. But it's not going to happen. I'm telling you right now, it's not going to happen. So anyway, that's it for today, folks. Stay cool, stay calm. Everything's going to be taken care of. The United States, the military of the United States is the most powerful military the world has ever seen. Nobody's going to come after us. Things are going to get taken care of. There's going to be order and peace, you know, reinstalled, and everything is going to be fine. And as far as the market is concerned, it depends on the economy, and the economy is just fine, and interest rates have no bearing whatsoever on the aggregate economy. You know, it might change the way it looks a little bit, like I was saying before, but no income is lost. Somebody pays more, somebody gets paid more. Same thing in the aggregate, all right? If you put the water at one end of the swimming pool, eventually it circulates all the way around to the rest of the swimming pool. And to end off on the swimming pool analogy, the drain is over and it's starting to fill up again. So you could take that to the bank, or I don't know, you could hide under your bed, or you could call your broker or whatever, or log on to Schwab and sell everything because you're scared and you're frightened and afraid and you don't know what to do and you don't understand and you're scared and you're afraid and you're frightened. That's on you. Anyway, that's it for me today. See you tomorrow, folks. Bye.